So GP practice income is largely fixed. It comes from global sums, the QOF payments, and etc. And that's designed to provide a net profit for the partner's income based on the expenditure of the practice, of which one of the largest costs is the cost of the people, partner's income and the practice there. So it follows that one of the biggest risks of that might reduce those profit margins and therefore partners' income is unexpected staff costs, particularly around unexpected absence. So, for example, in our experience, it will cost in most parts of the UK typically between £800 and £1,000 a day currently to employ a locum GP, and in some parts of the country even more. So those costs. So, for example, if they had to be a locum GP was needed to protect, say, a nurse practitioner's role or a full-time partner's, can run into six figures if those absences run for anything up to 12 months. That has a significant impact either directly on a partner or on the profit and the partner's income collectively. In addition, it's just the simple practical point of if you don't have cover in place and can't get extra bodies in, practices are already struggling with recruitment of doctors, other clinical roles, and key staff. So if you're unable to replace the absence of one of those key people on top of potentially challenging recruitment scenarios, that can just add to the difficulties of running your surgery. Long-term absence actually impacts everybody in a practice. Um, the additional workloads and the additional tasks people have to work and cover on, and obviously the shortage of capacity, reduced capacity, impacts everybody from across the clinical team, practice management team, and so on. Specifically, the cost of absence reduces profit. That has an impact on partners' income. You take £100,000 off the profit margin of a practice with four equal share partners, they've lost £25,000 off their gross income each. So, yeah, it affects everybody in the practice and specifically partners and their income. It's really important, firstly, that partners actually take responsibility for making sure their own cover is correct and the cover for the practice is correct, because it's their income's affected. So the first thing a partner should always be aware of is what's the wording of the partnership agreement? What liabilities do they have? Typically, that would often say that after a certain number of weeks, they're responsible for any additional costs that the practice receive, up to, on average, a year's worth of absence. That can be huge in terms of costs. So getting the cover at the right level is also important. Give you an example: an 8-session partner who underestimates the cost of locum by just £50 a week is suddenly at £20,000 a year short, potentially, in the difference between the costs that they may be responsible under their partnership agreement and the cover they might have arranged through the practice. So in addition, partners are responsible for their liabilities under the partnership agreement, not just once, it's across their entire career at the practice. So they have to consider that actually it's not just thinking what will happen if I go and have a one period of absence. You may get a chronic condition, something that's recurring. Multiple things can cause you to be ill. So making sure that not only you've got the right level of cover, but you've got cover that protects you through your entire career at the practice, and takes into account the fact that your health may change in future and that you need the cover until you either retire or leave. So actually, yeah, so not only just looking at the level of cover, but the longevity of the cover is important. So the first thing practice need to consider and discuss is the contingency plan they have in place for the different job roles. It's often a discussion which takes place for GPs, but not necessarily for other key staff in the practice through the practice management team and the ever increasing number of essential clinical roles, nurse practitioners, clinical pharmacists, and so on, that practices rely on. So considering what's the contingency plan, and I would always suggest that that's a conversation around what would we do if this person was absent for up to 12 months? How would we cover the work that they need to do? What would that cost? And then it becomes a question for the practice, really simple choice. Do we take that risk on ourselves? And if it happens, it comes off the bottom line, it reduces our profit, reduces the partner's income, or do we pay to protect against that so that we incur the cost of the insurance cover, but we know that if the absence occurs, we've got the protection in place at the right level. First thing to do is to accept and acknowledge that no two practices are the same. There are different working patterns, different makeup and reliance of different roles within practices, different partnership agreements, and so on. So, actually understanding all the key elements of what creates the liability is an essential part of trying to work out what the solution should be. So we work on a fully advised basis through the specialist financial advisors and work with practices to just work out what risks exist, what liabilities sit with who, whether it's the practice or the individual partners, and then create the solution which is right for your practice. And that will involve discussions around different job roles. Some may be essential that we replace if people go off ill. Other roles may be less so. And that's part of creating the right solution for your practice, but involves a little bit of time and is worth it in the end, because the alternative is to just pick an off the shelf solution and hope that it does the job when you need it. For practices covering the cost of unexpected absence, whether that's partners or key staff, it is a really important part of their contingency planning because it's one of the biggest risks to the profits for any practice. So PP Plus, Practice Protector Plus from Wesleyan, provides a long-term permanent solution to those problems. By permanent, I mean a plan that you don't have to look to renew every year, that comes with the support of a specialist financial advisor who will review that plan with you on at regular intervals, at least annually, but often more frequently than that, and will ensure that the right cover is in place for the right people. In our experience, locum costs for doctors, for example, can be anything between £800 and £1,000 a day. So those liabilities created by partnership agreements and shared across the practice can be huge in potential risk, and Practice Protector Plus provides a long-term permanent solution for those. Practice Protector Plus is obviously a solution to a liability and a potential risk for any practice. And it's really important to understand where those risks sit. Uh, Practices are very aware of the doctors and getting cover in place for doctors. But one of my early learning experiences in this role was working with a practice where the practice manager had suffered an extended period of absence and unfortunately passed away at the end of that period after almost a year. And talking with the practice the following year at their annual review and asking what the impact was and understanding how that had affected the partners and in the practice. Not just the fact that one of their colleagues was ill and eventually passed away, but the sheer additional workload that would have taken on. And because they had no contingency plan to cover the cost of that practice manager's absence, the extra work was taken on by the partners and done with no additional income. It meant it was very difficult for them to be able to give up work and create extra capacity. And the message that stuck in my mind was their acceptance and acknowledgement that, looking back, that even if they'd had a day each across that year, the difference that that would have made to their lives, to their families' lives, and so on, the impact of that. So Practice Protector Plus is a long-term solution to those problems. It's not just about the financial cost, which is huge. It's the implications and what that means to key people in the practice and partners and their families. Practice Protector Plus, provided by Wesleyan, that's focus on maybe a couple of key and really important features of the product. First is a feature we call cover without medical evidence, and it's working on the basis that this is a group cover protecting a number of people within a practice, and it provides a level of cover for each plan. It varies based on the number of people in the plan, up to £2,000 a week, where we can provide cover at standard rates and standard terms for all the plan members without any need for anybody to give us any details of their medical history. And that's guaranteed across the life of the plan, so the career of each of the individual members and anybody who joins subsequently. So that's a huge feature. And the second is the point out that one of that Practice Protector Plus being a permanent policy, one of the key elements is that following a claim, the premiums that you'll pay are exactly what you'd have paid if you hadn't have paid. So claims don't impact premiums in any way, which is a really important thing to take into account, because you don't want to worry about making a claim and how that might affect you in future. So one of the features of Practice Protector Plus is you've got the reassurance of knowing that if you claim, no matter how much that claim ends up paying out, it won't affect your premiums in any way.